Good day, systematic traders and investors. This is Dave, and I just wanted to kind of update you on something we've been working on. I hinted at this in an email blast that went out the other day. We're super excited about this. This is something that some of our members have requested, and those that are on their journey to becoming, a more systematic in their trading, a more rules-based trader, more systematic investor, are coming to realize that this kind of tool is super helpful. So I just want to kind of walk you through what we're doing and then lead you into where this is sort of leading. So if that doesn't make sense, it all will in a second. So if you go to our website, if you're familiar with our website and you go to all strategies available, one of the things you'll notice is the strategy spectrum, and we try to develop strategies that fit the range of different market conditions and strategies that exploit those market conditions that work. For example, reversion to mean, momentum, trend following, volatility, seasonality. We have our master list of strategies. Now, if you look at our master list of strategies, we update this, just this basic list every time we come up with a new strategy and it meets the criteria to be tradable, right? We don't put anything here unless it's something that we're ready to release to our members. We work on a lot of strategies in the background. Not everything makes it here. So this is a list of all the stuff that has actually made it, and then you can see a link to a back test here of the SPY ETF. That's kind of like a benchmark. So you can see basically how strategies, oops, I'm not logged in. You can see basically how strategies compare to that benchmark over time. So let me just log in quickly and show you what that looks like. Okay, and let me just do this again. Actually, let me just do it this way. Okay, all strategies available. And I'll just show you the benchmark quickly. You can just click on the benchmark and it will take you to a back test similar to our others, but it's just of the SPY buy and hold. So you can see what the statistics are. You can look at the charts. This is assuming you're starting with about $100,000 back in January the 1st, 2000 actually. And then you can see, what the maximum drawdowns were and what this all looked like. You can see what your profit table was, etc. So that's actually not the point of this. The point of this presentation is, or this video rather, is that this tool that we're working on, one of the things that we talk a lot about in our systematic community is, for example, if you look at how it works, or how it works section, in step number 3, we talk about the benefits of combining multiple strategies. So this is something that we believe in. This is something that we do with our systematic trading. That's why we release a range of strategies so that we can diversify our opportunities, we can diversify our strategies, we can diversify our risks, we can lower drawdowns, and we can smooth our returns. So if you've ever gone through our how it works process here, in step number 3, we have a little short video that talks about some of the benefits of this. Okay, so but what does this all actually mean? Like how do you quantify something like this? Because we are systematic investors and we're all about quantifying things. We've developed a tool to actually help our members do that. So let's just take a quick look, an overview of how this kind of works. We're going to be releasing this to the community in a couple of weeks, and then I'd like to get our members' feedback, because I think where this is actually leading is into how to develop your systematic trading plan. So that's kind of where this is leading. So what I'm going to do is I'm going to introduce the tool today. We're doing a couple of edits to the tool to add a couple of things into the tool. So it's actually not 100% ready, but it will be probably released to our members for free as part of our membership our systematic investing game plan membership. So if you are a systematic investing game plan member, you'll get access to this tool. But where this is leading is it's a tool that has been developed to allow you to sort of understand, and quantify what it actually means to combine certain strategies together. So what I'm going to do is just show you a quick demo of, we've got about 9 strategies. I'm going to combine all the 9 strategies together. Now it's not going to combine the mountain trading strategies from Gary B strategies. It's only going to work with the systematic investors and systematic investing game plan strategies that are available. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9 strategies so far out of the 11 total strategies that are offered on our site. So let me, instead of kind of babbling through this, let me show you what it looks like. Now what I'm going to do, I'm just going to open up a command prompt. We're going to make this as easy as possible. This is, I've got this buried in one of my directories, but you can actually just save this to your desktop. So what I'm going to do is, this is a Python program actually, and I'm just going to type in Python analyzebt.py. That's the script that's being used to run this program, this code that we've set up. And when I type this in, what it's going to do is it's going to give me the usage. Now, right now, we may change this, but the usage is you can either download or you can analyze. So what we're going to do is, because we update our backtests, our backtest statistics every week. Now, this table has been manually updated, but every time we add a strategy to this table, it will automatically add it to the functionality of this program. And all of these get, the individual backtests, like if you were to click on link to historical backtest results, those get updated every single week, every Saturday. So what I want to do is, I'm assuming that I haven't updated this in a while, so I'm just going to update it. So the way I do that is I just type in Python, I type in the command analyzebt.py, that's the script we're running, and then what I'm going to do is just type in download. And what this is going to do is, first it's going to check if I have my password credentials. If you don't, it will ask you for those, but since I do, it's just going to load them from file because it saved it last time. Now I suggest you just use a free like a free account, or you can use your account to do this as well. That's absolutely fine. If we don't have the credentials, it's going to ask you for your credentials. So I do have my credentials. It won't ask me for my login and password. So now what it's going to say is, it's going to go through this list and it's going to say, do you want the RSI2 pullback? And I'm just going to say yes. Strategy is chosen. Do you want the high 5 bounce? Yes, I do. So I'm just going to go through this list here and just select yes for each one of them. Narrow pullback for the S&P 1500, yes. Narrow pullback, S&P 500, yes. Supercharged momentum trend, yes. So I'm just going to go yes, 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 yes to everything. Now what it's going to do is it's actually going to grab the backtest results, the updated backtest statistics from our website. So you can see here it's just going through every single one of them, and it's grabbing the information from our website. So if you're logged in from your computer, it'll do the same, and it'll just grab the information from our website. You won't have to have anything else on your computer other than the script. Now we'll probably, when we release this, we'll probably compile it, so it's just a simple program to run on your computer. Right now it's running as a Python, a set of Python scripts. Okay, this is just going to take a minute. So now what it's doing, it's actually grabbing all this information. It's downloading all the backtest statistics that are needed for this, and it's saving them. It's saving them to file on your local computer. Okay, and once it's done that, then what it does is it's going to output all of the different strategies. So you can see here it's going to show you the portfolio equity of all of our separate strategies in the equity curves. So the way this works is it's going to give let me see if I can actually zoom in a little bit. So you can see here, like for the RSI2, it gives it a certain color key, and then you can see the actual equity curve and what the equity curve looks like since January the 1st, 2000, and it's going to plot the equity curve. Then what it's going to do is it's going to plot the equity curve for every single strategy that we selected, and it's going to plot the actual buy and hold. So you can see here, if you were just to buy the SPY, this, I guess this would be cyan. This cyan looking line is what it would look like if you would have just bought and hold the SPY using $100,000 going all the way back to January the 1st, 2000. Then what you can see is every single strategy we selected to combine, you're going to see their individual equity curves. You can see the best performing strategy, but as well probably our most volatile strategy is the FabTech rotation strategy here, which is the top line. And you can kind of see how all the different strategies perform. Now, what ends up happening is the black line is actually the result of all of the strategies that you've selected, not including the buy and hold, right? Because this is just our benchmark. This is our benchmark equity curve. So you can see the thick black line is our combined equal weight strategy. So if we were to say that we wanted to run all of these strategies in real time, then what happens is this combined equity curve is the result of all of those strategies and running all those strategies in real time. And as you would expect, it's going to sit somewhere in the middle, because basically what we're saying is take all the equity I have available. Let's say we're using $100,000, and I'm going to run all of these strategies equally. So I'm going to, if I've got 10 strategies, just for easy calculation, I'm going to run 10% to each strategy. And that's essentially what it does. And then you can see what the result is of combining all your strategies. And as you can see, right, like the equity curve is a lot smoother than any individual equity curve. So it kind of takes the best of all the strategies and allows you to, diversify and obtain the best that each strategy has to offer. So that's kind of what that does. And the intent of this is to be able to give you the ability to look at each individual backtest and then say, well, maybe I want to just run, these three strategies and see what the results of that might look like. So if you look at your underwater equity, you can see how it improves your drawdowns. So we're running this from January 2000 to April the 9th, 2021, which is the last time we've posted data. We'll be posting data again tomorrow, so you can see it'll be updated again. But if you look at this, you can see, look at your drawdowns for the SPY, just owning the SPY, and then you can see your individual drawdowns for each individual strategy, but look at the combined drawdowns of running all the strategies. You can see the black line here gives you essentially lower drawdowns than running any individual strategy. And that's kind of now we're able to quantify, what happens when you combine strategies that complement and offset each other. And that's basically what this tool is designed to do. So you can look at all the strategies we offer. You can kind of pick and choose which strategies might make sense for you. And this will help you plan which strategies you want to combine and quantify maybe what the results are going to look like. Now, one of the things that this doesn't do is you can't actually see inside the equity curve. So for example, this assumes that you're actually trading each individual strategy and taking all the trades that strategy offers. Now, if you're using the same account and you're combining strategies that trade the same universes, and let's say one strategy owns a ticker symbol and another strategy is trying to trade that, but it doesn't allow it, it doesn't really take that kind of granularity into account. It's very difficult to do that because we would have to have a much deeper level of analysis. What this does is it gives you a general idea of saying, if I were to run each of these strategies independently and then combine them, how would that look, right? So it doesn't include the fact that you may need to omit certain trades because some of your strategies are taking those specific trades and you can't own the same stock in different strategies, okay, if that makes sense. We'll get a little bit more into that. So here you can see the equity curves when we combine all the strategies, and here you can see what the result is for our underwater equity. And this outputs everything to kind of a nice a web page, like a browser-based output, so that you could even, run a number of different analysis and then print it out for your actual trading plan. And that's kind of the goal. So then the other thing you can see is like equal weight. This is what the monthly combined returns would sort of look like, and the yearly combined returns. And you can see here, because we don't actually have May, it says NAN, which is not a number, but you can see like the strategies would be up about 7.5% for the year if you were to be able to run all of them. Now, the other thing we've done is we've shown, we're going to be adding a little bit more information to this, by the way, so this is actually isn't complete, but you can see all the strategies. You can see the 5 highest drawdowns. So you can see, like for the RSI2, the maximum drawdown, the high 5 bounce, the maximum drawdown, etc. And then you can see, you can actually quantify, well, if you look at the actual equity weight, equal weight rather, of all the strategies, you can see the drawdown is less than most of them, except for, let's say, this strategy. So you can see that, there is definitely a benefit in terms of, and a trade-off in terms of returns versus drawdown. And the goal here is to get better returns, but with less drawdown. That's the goal of what we're trying to do when we're putting our trading plan together. Because as you can see here, like the FabTech rotation strategy is our best performer, but it also has the highest drawdowns. Now, the other thing you're going to notice, and that's why we combine strategies, right? Because if we were to combine them, we might not get as good results, but we're going to also get, somewhere in between, but we're going to get less drawdowns, and that's the goal. So if you look at the SPY buy and hold, I think actually we need to take a look at this. I think this is actually, it may be an error. We need to confirm this. But the drawdowns have been on average about, the worst drawdown for owning the SPY buy and hold has been about 55%. So you can see here, like I don't think a lot of people can stomach a 55% drawdown. I think, and from my own experience, like 20% starts to feel really painful. And that's 20% from peak to trough, not necessarily from your starting equity. But it could be from your starting equity depending on when you actually trade. So what we try to do is minimize the drawdown so that we can stick with our strategy. So if you were to buy and hold the SPY, yeah, you would be hitting new highs today because the market's hitting new highs. But at some point in time, you would have had a 55% maximum drawdown. So what that means is if you started with $100,000, at some point you would be down $55,000 if you were to, well, it depends where you were at actually in your equity, but let's say you experienced that as soon as you started trading, you'd be down $55,000. So the question is, would you have actually stayed with that strategy? And the answer for probably 90% of people is probably not. So the goal of this entire process, I don't mean to belabor the point, but it's to get is the best returns possible with the minimum risk possible and the minimum volatility in your equity curve. So you can see here, like an equal weight, having 11% drawdown is a lot more reasonable than having a 27% drawdown or a 55% drawdown. Now, one thing to note here, because these are monthly returns, these are not going to match up exactly with our individual backtest results. So our individual backtest results on our website, which are generated from our backtesting software, are typically going to be higher. So I can give you an example, like the FabTech rotation is probably going to have like a 35 or 40% maximum drawdown. But because we're using monthly returns, we don't get the granularity of daily trade results. We're only able to pull the monthly results. So although it's not going to be exact, it's going to give you a better idea of what it's actually doing, and the actual outcome is going to be similar. Okay, so just, I hope that makes sense. But like the monthly results, monthly returns are less granular than daily returns, and they tend to have, they tend to show slightly better results, and that's just the nature of the data. Okay, so let me just kind of show you an example And you can see some of the, we've got some of the statistics output to the command line interface as well. So what I'm going to do is now it's going to be a little bit quicker because we don't actually have to download the backtest results again. So what I'm going to do is, I'm just pressing the up arrow so I can see the history of commands in my command line. So instead of download, what I'm going to do is I'm just going to go analyze. Okay, and this is going to pull the it's going to pull the data that's been saved. Okay, so it's been saved to our local drive now. So what I'm going to do is I'm just going to select a couple of strategies. So when I'm going through this, I might say, okay, I looked at my strategy spectrum, and maybe what I want to do is I want to combine a reversion to the mean strategy with a momentum, maybe just a momentum strategy and a volatility type strategy. So when I look at that, I've got a reversion to the mean strategy, the RSI2 pullback. I've got the NDX, or sorry, not the NDX, supercharged momentum, has a little bit of momentum and trend following. And then I'm going to select the squeeze, pause, sprint because it's more a volatility type of strategy. So let's see what that looks like. So we'll go RSI2, we'll combine the supercharged momentum trend, FabTech rotation, and let's say the squeeze, pause, sprint for the S&P 500. So let's have a look at what that looks like. So I'm going to select RSI2 pullback, yes. High 5 bounce, no. Narrow pullback, no. Narrow pullback, no. Supercharged momentum trend, we said yes. FabTech rotation, yes. Let's get a little bit of momentum in there to supercharge our results. Squeeze, pause, sprint is our volatility strategy, so let's say yes. And then let's just say no for the remainder. Okay, so now what it's going to do is it's just going to combine the specific strategies we wanted, and we can have a look at what those results are. So it's going to, obviously you're going to have to experiment with this a little bit and kind of figure out how you want to combine your strategies. And then what you can see is, what does my combined equity curve look like? That's the black line. Looks pretty good. It looks a lot smoother than the buy and hold. It looks smoother than our best strategy, which is the FabTech rotation that trades the NASDAQ 100. So you're kind of getting the best of all worlds here. We're able to quantify it. Let's look at our drawdowns. Our drawdowns are lower than the individual strategies. So now we've quantified what it kind of looks like in terms of returns, our equity curve here, and our underwater equity, which are our drawdowns. And then we can kind of see what the returns look like on a year by year basis and a month by month basis using our equal weight profit table. And then we can kind of quantify what our maximum drawdowns look like. So, we're about 11% versus, about 55% for the SPY ETF, and our worst drawdown here for the FabTech rotation, which is 27%. So that's kind of what we're doing here. That's kind of how this works. This is a tool that will be available strictly to our paying members. It'll be available in the next couple of weeks. And, do me a favor, hit me back. Send me an email to Dave at systematic-investors.com or systematic-investors@gmail.com. Wherever you get this communication or email, just hit me back and let me know how interested are you in us putting together a trading plan development presentation to help you understand, the things that you might go through in order to come up with a simple rules-based systematic trading plan, and then to be able to implement this tool in order to help quantify what that trading plan looks like. So, based on the level of feedback we get, I'd be happy to put that together. I already have the framework for that, and I'm happy to help our members if this is something they're interested in, putting together a presentation to help our members put together their own rules-based systematic trading plan. So if you're interested in trading plan development, just hit me back, let me know, and I'll be happy to do something like that. And we could probably put that together in a month or less, and we can have, a live meeting to go through that and help our members to help them put their trading plans together. So I understand we're about 24 minutes, almost 25 minutes now. I apologize. I wanted to keep this to 10 minutes, but I haven't created a video in a while. I'm not as sharp as I usually am. I apologize for that. So looking forward to hearing your feedback. We're really excited about this tool. It's been a long time in the making. It's been a long time coming. It's a great tool to help quantify, how to combine strategies, put them together, and this leads into developing your own, strategy mix and trading plan. So looking forward to hearing from you. Just hit me back. Let me know if you enjoyed this video. Give us a thumbs up or a like on our YouTube channel if you like this. Any constructive criticism is welcome. Any positive feedback, of course, is welcome. It lets us know we're on the right track. So looking forward to hearing from you. And good systematic trading. While the market is hitting new highs, things are going well. Looking forward to hearing from you. Have a great day.